So in this YouTube video, before we go ahead and get started, if you haven't already, please make sure to hit that subscribe button. I know that over half the people that watch our videos don't subscribe. So just hit the subscribe button. It's super easy. Also, if you enjoy these videos, make sure to hit like and also check out my website, ateentrader.com, also linked in the description. I'll be doing a post later this week about the current markets, technicals, news, fundamentals, all that various stuff is covered on that website, along with some free materials for you to navigate and use. So anyway, continuing straight on, let's get right into it. So what I really want to talk about today is trends versus consolidation, right? So how to identify when a market is in a trend or when it's in a consolidation period. So I see that that is something people are unaware of a lot, or that people seem to not be able to properly navigate because they're trying to attempt taking breakout trades while we're in consolidation, right? And when you're in consolidation, ideally you want to be taking positions after that consolidation has broken. So the first things we want to do is we're going to be on the daily time frame for the most of this because it's essentially the same, but you're going to be able to find better trends on the daily time frame. We will drop down a little bit to look at consolidation and trends on the lower time frames, but typically those are more intraday price fluctuations. But anyway, on the higher time frame, so really what you want to look for when identifying trends is just big full-bodied candles that are moving in the same direction. Right? So right now we are in the midst of a trend, right? We have been in the midst of a trend over the last week. I talked about in my weekly rewind video. So if you want to check that out, that'll be linked up in the top right sometime around now. So again, I've talked about these things in real time, right? So in real time, what you want to be looking for is big full body candles that are moving in a single direction, right? So we have big full body candles moving in a single direction. We have consolidation, or you could even consider this a drop in price, a base in price, and then a drop in price again, right? So if we, as I said, we'll drop down a little bit here in a second to kind of identify that, but we'll see on the lower time frames how this continuation of a downtrend, of this momentum, of this trend has full-bodied candles even on the lower time frames. But we're going to look at a couple more examples on the higher time frames first. So next we can see things like this, right? So again, we're seeing big full-bodied candles moving in the same direction overall that are moving, again, in this scenario, to the downside. So as always, when I'm looking at these, I want to be capitalizing on these trends and looking for zones to trade to, like we have here and like we have here, right? And so that's really what we're looking for in terms of trading trends. But then we want to also be understanding and be able to identify consolidation periods, right? So consolidation periods are periods like this right here. Oops. So this box up here, and then periods like this box down here. And then obviously we have smaller consolidation periods or very slow trending periods like this. And really what you want to look for when we're in consolidation, or when you're trying to figure out if we're in consolidation or not, is just, again, look at the candles, right? So in a trend, we're typically moving in one direction. If we have any pullbacks, they'll be much less significant. What I mean by that is right here, right? We have this big move to the downside, a less significant pullback, and then another big move to the downside. Again, confirming that we are in a trend. Right here, we have big moves to the upside, small little moves to the downside on this wick, right? And even right here, little pauses. But we're continuing moving to the upside. Also, for example, right here, we have big moves to the downside, big full-bodied candles, with little moves reversing us back to the upside. Again, confirming to me that this trend is in a single direction, because anytime the market pulls back significantly more than what's noticeable on the daily time frame, the market will then begin to sell more and continue that trend, right? So understanding how that works, we can then kind of integrate that into looking at consolidation. So consolidation is just a period where we have usually equal size candles in both directions, right? Not equal size, but we have candles that are going up and then down and then up and then down, and overall it's just confusing market conditions, right? So one example is right here. So
Hi, I'm Rex Moore with the Motley Fool in front of BMW's self-driving exhibit at CES in Las Vegas. Now,
we have candles that are moving up and down. Look at this. Up, down, up, down, up, down, up, 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 down. So we're seeing this period where there's really no clear understanding of what's happening in the markets. So this is usually where the markets are either establishing a base to move lower or establishing a point in price to pull away from as it's collecting orders to move to the upside in the future, which is what we saw here, and moved to the upside, came back, grabbed a little bit more liquidity, and then started this uptrend. And here's another example of, again, consolidation, right? So we have periods in price where the market is not trending in one direction. We will for short periods of time. Remember, this is the daily time frame, so we are seeing short-term price trends. But overall, right, we don't have these big solid trends or these weak pullbacks within these solid trends. We just have 2 down, 2 up, 1 down, 2 up. And so again, it's this period of price where there's no clear identification, no clear breakout occurring, right? And so when you're looking at this, the ideal situation is to do something like this, either draw a box, draw zones, right? And you can, of course, color these. I just didn't color them to make them, be able to see what's on the inside. Draw a zone on the top and on the bottom and wait for price to break out of that zone, right? Because the goal is to have the most probable, the most likely outcomes in our trading, not to put yourself in a situation where you're trying to speculate which way it's going to break out unless you have higher time frame understandings like I did on my last Euro USD trade. And if you want to check that out really quickly, we can check that out right here. So for this example, we had consolidation right here. I noticed that we were at a support, or we were at a resistance zone. So I took some positions here, and then we did break out to that downside and trended all the way down to here. I exited some positions down here and at the bottom. You can check that out on my Instagram. My Instagram handle's right here. And so again, this is a perfect example of when we're seeing this consolidation period pause. We see no clear direction here. We see rejections, we see downtrend signals, but then we move back up, right? And so it looks as if it's rejection on a higher time frame, but if we drop down to the lower, we can clearly see that this is confusion, this is consolidation, this is a period where the markets are equally priced, right? Consolidation is when the buyers and the sellers both mutually agree by buying and selling to keep price within a range because there's no significant power. There's no news, there's no fundamentals that are moving the market, trending the market, right? Because if we have very bearish news events on the euro versus US dollar, for example, we're going to see people that are short the short the euro versus the US dollar to add positions, and the people that are long the euro versus the US dollar begin to exit positions and maybe even switch to long, which will.
Warren Buffett once got paid $7.5 million to not buy Coca-Cola stock. Now, if you think that sounds crazy,
create this volatile period that we see. So again, we can see on the 4-hour that consolidation occurs similarly. Likewise, we can see periods in price where as we're in a downtrend, we consolidate before falling again, or again, like I said, a base drop. So another example of that would be just right here, right? So we're consolidating in this period, we're not trending down. This typically will happen towards the end of the normal trading day, typically after 3 to 5 p.m. Eastern Standard Time, maybe even we'll start at 1 p.m. Eastern Standard Time, and it'll typically go to or through London session, just depending on the day. So for example, here we have multiple days, and then we finally break out at 9 a.m., or we break out at 9 a.m. Eastern Time, right after 9 a.m. close, right? And so these are the type of things that we are looking for and watching for. We can also just, again, break it down and look at other points in consolidation, right? So again, we're on Euro USD still. We're going to go back and look at some examples on Euro versus the British Pound here in a second, because I did want to talk about that. But again, we have this downtrend. We can identify that because we broke out, and then we started showing these single candles moving very firmly to the downside. But then we can see that confirm that we're in this downtrend, confirm that we're in this momentum period, because this pullback, right, is very small, very confused candles, right? So we have pretty much neutral candles in the sense that about half are green and about half are red, and then we begin to when the market opens back up at 7 and 8 p.m. or 8 a.m. Eastern Standard Time, we are then moving back and having our full-bodied candles again, right? And then again, towards the end of the day, we're having our period of consolidation where the market has again kind of exhausted. There's not as many participants, and we're seeing points in time where the markets are moving up and down relatively equally. And we're continuing to see that occur to this moment, again, because the markets are a little bit higher time frame, a little bit wider range, are not able to move up or down very drastically. And so what we're waiting for in this point in time is the markets to either break to the downside or break to the upside, right? That's the most logical way to go about this. And so again, we identify this as consolidation because of, because of the fact that there is no individual direction that the market is trying to move. Whenever we move down, that is met by a move to the upside, and then we have very, very, very tight consolidation periods where there is absolutely no clear way or no clear direction of where the market is or is trying to go, right? And so that's really the definition that we're looking at in terms of consolidation. There is no true reason or thing that we can see that is telling us where the market is or should be going. So going back to our euro versus the British pound, again, we were looking at this little area in terms of identifying this consolidation period within a downtrend. So to better identify that, we can drop to a couple lower time frames, and we can again see that right here. We have this point in price, or this region in price, where there is little to no directional movement in this currency pair. And we can see, even if we go a little bit lower, how this currency pair is continuing to stay in this range, and even here, again, continuing to show red candle, green candle, red candle, green candle, the inability to show idea or to show direction. One thing you don't want to get yourself caught into is little movements like these, which are typically results of exhaustion. But as long as you're trading zone to zone, so for example, zone to zone, you should be.
If you're trading stocks in 2020, I can almost guarantee that you're losing money or you aren't.
For the most part, relatively okay. But again, I typically suggest you're trading with a trend because that is, again, my opinion, the best way to do it. That's what I do. You don't have to do it, but that's what I think for me works the best. That's why I have the FTR indicator, because it's a continuation of a trend pattern, etc. So, and again, other examples include this region where, again, we're showing no real identification of trend. We see a trend here, but once we start showing up and down, up and down, up and down, that's when you should be reevaluating, should I be in this position, etc., etc. So, kind of to conclude and to recap everything, when we're looking for trends on the higher time frame, we're typically going to see those as candle after candle after candle, firm, thick bodies in the same direction. And we're typically going to see consolidation periods as periods where the price will trend for one direction, just one or two candles before reversing, and again, trading in this tight range. And that's kind of what we're looking at for consolidation. When we drop down to a little bit lower time frames, we may see consolidation kind of look as a little bit wider range, for example here, but we still will see periods in price where the market is trading candle by candle in opposite directions, again identifying this continuation of consolidation, right? And so that's really what you want to look for. Is the market moving in one direction, or is it, for example, let me go ahead and draw. So is it moving in one direction, or is it moving kind of just to the right, right? So is it moving down and right, up and right, or is it moving just to the right? And so that will kind of help you identify which way we're moving. So to kind of help to identify if we're moving, if we're in a consolidation period before another leg to our downside. So for example, if we're moving down and then we consolidate and move to the downside again, how to identify that is really just to look at the lower time frames in terms of like the 1 hour, the 30 minute, and kind of get an idea of how price action is occurring, right? So for example, right here, we see that the market is in a downtrend because on the higher time frame, we saw multiple days in a row of bearish candles. And then we see this little weak pullback after it broke out, right? So what we can look for here is how weak this actually tried to reverse, just like we saw on the euro versus the US dollar. So due to this weak pullback, we can reasonably expect that this will roll over during a major session because there is low liquidity during these periods of time of this consolidation or weak pullbacks. So when we're in a trend, we may have a consolidation period that slightly pulls the price back up before making the price go back down again. And so that's kind of how you can navigate that. So again, trends, multiple big bodied candles moving in the same direction. Consolidation, typically tight ranged price that is very undecisive on which way it wants to go. When we're looking at the lower time frames, however, they may appear as wider ranges, 30, 40, 50 pips. But again, looking at those wide ranges, there is no clear direction on where the market may want to go. And usually the best decision is to simply wait for price to break out to the upside or to the downside. So again, if you did enjoy this YouTube video, if you do have any suggestions, please leave them in the comment section below. And again, if you like this video, please make sure to hit the like button, hit the subscribe button. And remember that all of these obviously are just what I do, my suggestions, and are for educational purposes. I don't want people to appear as if I'm trying to tell you exactly what you should do. Everything that you should do with your trading should be your own ideas, and you should take whatever other people are teaching you and apply them to the ways that they work best for you, because how I trade and how you trade may not work perfectly for both of us. And I highly, highly, highly encourage that you do what works best for you, as I would for anyone else.